Long Phan, giving trust, receiving solutions.
How can foreign investors withdraw capital from Vietnam? In the ever-changing global economic landscape, the process of investing in and withdrawing capital from various markets has become a highly discussed topic. For foreign investors, in particular, the decision to withdraw capital from the Vietnamese market is both crucial and complex. The withdrawal of foreign investors from companies in Vietnam can occur for a variety of reasons, ranging from changes in business strategy to economic and political factors. So, when a foreign investor decides to withdraw capital from a Vietnamese enterprise, what methods can they use to execute this decision? Transfer of shares/contributed capital to another investor. The first method for foreign investors to recover the capital they have invested in a Vietnamese enterprise is by selling their shares or capital contribution to another investor. This is typically achieved through negotiation and agreement with a potential buyer. However, this method does have some limitations. For joint stock companies. In the case where the investor is a founding shareholder holding ordinary shares, within 3 years from the date the company has issued the enterprise registration certificate, the investor is only free to transfer ordinary shares to other founding shareholders and can only transfer to non-founding shareholders with the approval of the general meeting of shareholders. Note that the investor does not have voting rights regarding the transfer of those shares. Article 120 of the Law on Enterprises 2020. If the investor is a founding shareholder holding preference voting shares, they are not allowed to transfer those shares to others, except in cases of transfer pursuant to a legally effective court judgment or decision, or inheritance. Article 116 of the Law on Enterprises 2020. If the investor does not fall into the above cases and the company's charter does not impose restrictions on the transfer of shares, the investor is free to transfer shares to others. For limited liability companies, LLC. The withdrawal of foreign investors from an LLC is executed by transferring their capital contribution. In the case of an LLC with 2 or more members, the investor must offer their capital contribution to other existing members in proportion to their current capital contribution in the company under the same conditions. If the other members do not purchase or fully purchase the capital contribution within 30 days, the investor is then allowed to transfer the capital contribution to non-members under the same conditions. Article 52 of the Law on Enterprises 2020. In the case of a single-member LLC, the investor is free to transfer the charter capital to others without any restrictions. If the investor transfers part of the charter capital to one or more individuals or organizations, the company must proceed with reorganization in accordance with Article 78 of the Law on Enterprises 2020. Vietnamese enterprises repaying a portion of the capital contribution to investors. The company has the right to repay a portion of the capital contribution to investors in proportion to their capital contribution in the company's charter capital if the company has been in continuous business operation for at least 2 years from the date of its initial enterprise registration certificate and ensures that all debts and other asset obligations are fully paid after the repayment to investors. Articles 68, 87, and 112 of the Law on Enterprises 2020. Additionally, in the case of a joint stock company, the company has the right to repurchase up to 30% of the total ordinary shares sold, a part or all of the dividend preference shares sold. In other cases, the repurchase of shares is decided by the general meeting of shareholders. The board of directors decides the repurchase price of the shares. Article 133 of the Law on Enterprises 2020. The company repurchasing the entire shares/capital contribution of the investor. In the course of business operations, internal conflicts are inevitable. In such cases, if a foreign investor disagrees with certain decisions of the company, they have the right to request the company to repurchase all of their shares/capital contribution. Specifically, joint stock company. The request must be submitted to the company within 10 days from the date of the general meeting of shareholders passing the resolution on the issues. The company must repurchase the shares at market price or at a price determined according to the company's charter within 90 days from the date of receiving the request. If agreement on the price cannot be reached, the parties may request an appraisal organization to determine the valuation. Article 132 of the Law on Enterprises 2020. Limited liability company with 2 or more members. The request to repurchase the capital contribution must be in writing and sent to the company within 15 days from the date of passing the resolution or decision. Within 15 days from the date of receiving the request, the company must repurchase the capital contribution at market price or at a price determined according to the company's charter, unless both parties agree on the price. Payment shall only be made if after repurchasing the capital contribution, the company still fulfills all debts and other asset obligations. Article 51 of the Law on Enterprises 2020. In general, Withdrawing investment does not only involve selecting the method, but also requires compliance with legal procedures in Vietnam. These steps include registration with government authorities, disclosure of information, and fulfilling tax obligations. We hope this video has provided useful information for you. If you have any questions or need further advice, please feel free to contact Long Phan for assistance.
Long Phan, giving trust, receiving solutions.